Hey guys, how's it going? It's Ollie here from CryptoVest.com. It is the 28th of December today, and we're going to be looking at Bitcoin trading against the US dollar over 4-hour candles to kick us off again after Christmas. We had that nice sort of Santa Claus rally just before Christmas from around the 16th to the 24th. It brought BTC back over the $4,000 threshold, and everything was looking kind of good at that point. People were hopeful that this would sort of be the late start of a Q4 rally. However, as you can see, we sort of ran into a very strong sort of resistance here. We sort of started to break bearish from here, and already since Christmas now, in the last sort of 4 days, we've unraveled and now 15%. We're back down around that sort of $3,000, sort of $600 mark. So we're still just, if we looked at the last Bitcoin tea I broke up into two sections. We had the first channel between 4,400 and 3,600. That was a kind of safe zone. And then below that we had the 3,600 to 3,000 zone. So at the moment we're still just in the sort of safety zone area. And as you can see, a lot of people, if you look at a lot of technical analysis at the moment, a lot of people are predicting an inverse head and shoulders pattern. So this is a very, very bullish trend reversal pattern, and I'll just show you above what it looks like. So it's typically characterized by a neckline here, and as the price action falls, it creates this sort of first left shoulder, which is a sort of small peak that returns to the neckline. Then we have the head, which is an elongated bear market, which then makes a strong recovery back to the neckline, and followed by a right shoulder. And then it sort of, once it breaks through the neckline on that right shoulder, then we have the sort of bull run. So as you can see right now, the neckline appears to be this sort of sloping level here. If we connect these sort of low, higher highs recently, we've already got the pronounced sort of left shoulder here, snap back to the neckline. Then we had this sort of elongation through the middle of December, and obviously the the sort of Santa Claus crypto rally managed to pull that back to the neckline, and now we've got the sort of form. It's already starting to form the right shoulder, and as you can see, we've had that strong sell-off that's helped us sort of create this sort of fifth point here, and then we're just looking for point 6 to complete. In order for this to happen, obviously we'll need to see it retrace to an obvious shoulder line here, and this second blue line here appears to be a fairly strong shoulder line. As you can see, it traces back, and we can connect it to a strong resistance back on the 10th of December, as well as another resisting area around the 18th of December. And so this red circle here highlights an overlapping region between this downtrending support and this sort of lateral strong support here around $3,470. So this would be a really strong support if the Bitcoin was able to fall onto this before pushing on. We've kind of broken up into three color sections here, and obviously this green section is a sort of safe zone for now, and at the moment we're sort of hovering on top of this sort of support here at 3,570 sats. As you can see on the choker money flow indicator, there's been a strong surge in buying pressure very recently. Although we're starting to consolidate here, it looks like there's been a few efforts to try and break over the 100 moving average, although this is creating a very strong resistance in the short term. But if bears are able to overcome this sort of current buying pressure and push us down, then we're still sort of safe as long as we oscillate within this range. If we break through this area and we break below and we start to close into this section, then we'll be hoping to catch along the 3,300 or so support in the middle, which has been a sort of fairly strong support in the past, particularly the start of December, and we'd like to see it recover from there. If it doesn't and we break into here, then we're in trouble, and then from here it's looking like we may start to head back towards that sort of danger zone at $3,000. So this will be a key area to keep an eye out for. But like I said, we've got two areas at the moment where we'll be fairly safe in the short term. And then as we get closer and closer towards January and in Q1 of next year, and all the things to look forward to in that, you know, the back futures launch, Fidelity launching its digital asset platform, and all these other things, that should hopefully generate the bullish momentum we need to really kickstart a bullish recovery for this particular asset. So yeah, so in the meantime, it's looking alright actually. If we look at the relative strength index, everything's looking kind of like momentum is starting to build again. You can see here we're picking back up off the sort of, we were almost near the oversold region on the 4-hour candles, but as you can see, we're now starting to pick back up again. It's not as strong as we'd like, but there's been overall an increasing sort of uptrend in momentum, as you can see, all the way back from November. We're definitely creating lower lows as we're climbing through the channel. So overall momentum appears to be increasing. So it's a fairly promising sign there. But if we look at some sort of trend reversal pattern indicators, you can see that we're still bearish at the moment. So the parabolic SAR, if we look at the Arun, so the parabolic SAR, we've still got indicator dots above the price action tells us that the trend is still currently favorably bearish. And also on the Arun indicator, the Arun up is below the Arun down line, so we haven't seen a reversal trend yet. So we're still waiting to see. So overall, still looking bearish. So it's looking likely that we'll continue down and probably enter this sort of first green area here in the short term. And then, like I said, this all eyes will be on whether we can make that sort of strong right shoulder recovery off this overlapping support area for there. And then from there, we'd like to obviously see a strong recovery bring us all the way back to the neckline here. Somewhere it might be around that sort of $4,145 mark, and then from there we'd like to see a very strong recovery going on from there and a bullish continuation. So yeah, overall there's a few things to look out for before we get really excited about this inverse head and shoulders pattern. We do need to see a few things happen before we can, confirm that. And in the meantime, if things continue to go bearish, and we've got a few ideas of where we know that if the price drops below, then we should start to worry. But in the meantime, everything's looking fairly okay. And if in the short term we break above this 100 moving average, and we can sort of take on this sort of first resistance at $3,600, around $50, then we'll be in a very good short-term position to maybe make an early recovery back towards the neckline and maybe ignore this lower level. So yeah, so let me know what you think in the comment section below, guys. Let me know if you are bullish or bearish for Bitcoin. As always, love to hear what you think. Drop us a comment as well and let me know if there's something you want me to have a look at. Please check out the full TA at cryptovest.com and like and subscribe. Thank you, guys. Cheers.